Yeah, bienvenidos, everybody. Bienvenidos. Buen domingo. Sunday. Well, it's Sunday afternoon, 12:33 at the time that I'm recording this video. Sunday afternoon here in Bucerias, Mexico. Bienvenidos a nuestro canal. If you're new to the channel, YouTube pushed you here for a reason. You must be interested in Mexico, perhaps. Maybe you're interested in what is kind of going on in the world economically. I'm a 12-year resident now of Mexico. I've been living here 12 years now, and been on YouTube, I guess, close to 5, like making videos and content about what it's like to live here. And in this video, we are going to discuss, oh my gosh, my friends, the death of the Canadian dollar. I've talked about this in past videos, and I'm going to talk about it again today. I thought, just based on current things that are happening out there right now with the tariff and the trade wars, a lot of the things I was speaking about several months ago are kind of coming to fruition. And I want to kind of like do a little bit of a deeper dive into some of the fundamentals as to why you actually should be almost terrified to be holding Canadian dollars at this point. And it is time to really start considering what that could mean if the Canadian dollar literally collapses. And might not happen tomorrow. These things usually don't happen overnight, but we are going to go into a long-term downtrend on the Canadian dollar. It's just pretty well inevitable. So how are you going to protect yourself and all that money that you've saved away for your retirement? You're sitting in a Canadian GIC. No. You wanna be out of that and figure out how to protect yourself. I'm not here to give any financial advice. I'm here to entertain. I'm here to share some information and opinion of other YouTubers out there that hold the same philosophy as I do. And I just want to give you a little bit of my own technical analysis on why I believe this is inevitable. Anyways, so I'm thinking about some new formats here, how we can, my mouth a little bit dry today. And it is, you know what, I'm having a tasty beer. It is 5 o'clock somewhere. Anyway, this is Sunday, and I thought, why not kick the Sunday afternoon off with a nice, tasty German lager. But you're not here for beer advice. You're here to see about what's going on in Canada, what's going on with that Canadian dollar. I thought I would share a couple other YouTubers and give my thoughts on this. Again, just trying to play around with a couple different ways of sharing content and continuing to get new and interesting content out to you guys. So let's give this a go. Okay, so I'm going to share my screen. And this is from Griffin Milks, and he's a fellow Canadian. Watched a few of his videos in the past. And this is the thing with YouTube, right? Like, you watch certain people, they pop up, and then, you know, they're always kind of sending you new stuff, trying to get you hooked into one video or the other, because that's just kind of how the algorithm works. Anyways, he popped up last night, and I thought, well, this is kind of an interesting video. And as I kind of went through the whole video, I picked out a session that is about holding Canadian dollars. So let's watch this together, and we'll have a little bit of a discussion on it. Sound good?
In the world of investing, everything has to do with rate of return in relation to the risk of said investment, generally with a higher rate of return for a higher risk involved. Well, in comes the concept of exchange rate risk premiums, essentially how risky investors think it is to hold Canadian dollars versus US dollars right now or at any other given moment. And with Canada being viewed as a highly unproductive and confused country right now, people have less economic faith in the country than in decades prior. Plus, with Trump now being in place, a lot of people have much higher confidence in the American dollar, gaining further value over the Canadian dollar.
So that's kind of interesting. Where I like what he said. Well, I don't necessarily like what he said, but it's like totally true. It's confusing. Canada is very, very confusing right now, and you have a very unpredictable leader on the U.S. side of things, and obviously done by on purpose. I have my own philosophy on that. I think Trump was put in the penalty box in the last election because he wasn't towing certain lines, and he was given a second chance. And here he is today to do the bidding of those he reports to. And like, make no doubt about it. I mean, Trump's an actor. He's a paid actor, a very successful guy. I'm not saying that he didn't get to where he is by being smart, sharp, and everything else, but he is being controlled by someone. Who that someone is, I mean, we could all take a guess on that, right? But there's billions and billions and billions of dollars out there of wealth held by a small number of people, and they inevitably control the politics, right? So they hired their best actor, and you know what? In these times where you have this uncertainty, you definitely have people flocking towards the US dollars. Let's continue on with what Griffin has to say.
I also think it's due to people's just overall view of Canada right now being a second-tier place to invest in, and where the dollar will continue to drop due to inflation as well, which could be the case with these potential relief packages that we've been talking about.
So a second-tier place to invest. Can you imagine that? And as Canadians, we kind of feel pretty proud about ourselves. I think we have an unrealistic view of how good we are, right? And how good our system is. Really, we shot ourselves in the foot when we allowed the federal government to devastate our resource sector. That's something that could have been dealt with in a more efficient way by building pipelines, getting our energy out to other countries that needed it, and also getting it coast to coast in the most efficient way with the Trans-Canada Pipeline. But, shot ourselves in the foot. And it's not just today that we are being viewed as a second tier place to invest. This has been a long time in the making. And it's been happening for a while, but it's really starting to come to a head. And when investors are nervous about investing in a country, they pull out. And if investors start pulling out of Canada, which they have been doing, so if they continue to do that, it's going to cause some pretty dramatic ripple effects that the government's going to try to solve by doing what? Printing money, giving us bailouts, universal basic income, UBI. All this shit is just around the corner, and it's going to dig the hole deeper and deeper,
which would flood the market with even more cash, devaluating the loonie even further. So this brings up the idea that holding CAD is just more and more risky in general. And to bring things even closer to home with my own investments, I've seen this coming for a while. And therefore, 100% of my cash held in investment accounts is actually all in US dollars, which has paid off as I haven't been directly affected to the same extent by the crumbling value of the Canadian dollar. And also, for the record, I made videos about this very topic back in August 24 and still got comments like the following. So I'll leave you with this. There's a reason a lot of the Canadian monetary policy focuses on the US dollar and what Americans are doing, even though this is decisions that the Canadian bank is going to be taking. Generally, we try to follow the US in lockstep, but now for the first time in decades, the countries are really starting to spread in regards to where they're headed economically. And we in Canada are the ones on the losing end big time.
And that's interesting. I've talked about this before, and it's interesting that he made a video, and I'm going to share one with you guys a little later, but I made this 7 months ago, and I was talking about the inevitable currency collapse. And when I talk about inevitable currency collapse, that doesn't mean it's happening tomorrow, okay? Like, that's not how things work. But when I get to the point of sharing my video, we'll go back 7 months ago, and we'll look at what I was talking about at that time, and really exactly where I thought we would be. And the last thing that Griffin mentioned was we tend to move lockstep with the US, right? The US printed money during COVID. Oh yes, let's just print a lot of money, right? The US gave away free money to people, like UBI type stuff. Let's just do it, but like actually do it 10x, right? We think we're kind of cocky as Canadians, right? We think we're somehow special out there in the universe of economics and other countries. No, we're not. As a matter of fact, we're a very small country with very little economic firepower, and we literally try to follow the US, play their game plan, and they kind of sucked us into it, right? We just lockstep with the US, following their exact moves, and we're going to be on the losing end of that for sure.
So what should we do as everyday residents in Canada? Realistically, there isn't much that we can do as everyday residents other than continue to go on about your own business. Try to make as much money as possible and invest as much of it as possible, because we can't really make any impact on who's taking these shots and making decisions for the country, unfortunately. And I know a lot of Canadians are struggling right now financially, so the idea of investing is totally foreign right now, fair enough, but truly that's the only thing that you can do, is try to increase your skills and your income. There's really no other way out of it. And if you can, try to invest in US positions in the stock market, and also try to hold other investments as well. I personally invest a lot of my capital into real estate, even though that's its own set of challenges, but always try to invest as much as possible and only keep as much as you truly need in an emergency fund, a couple months worth of Canadian dollars if you're in Canada. By the way, if you want to start investing, make sure to check out my...
All right, so very good advice. I know a lot of people who basically have their money in Canadian denominated GICs, making their 3 or 4%, whatever it is right now. And that GIC account is getting devalued and devalued. So if you are working with a financial planner that's got you kind of just in like what they consider ultra low risk by just holding government bonds at a coupon rate, just think about this. You have $2 million in the bank, and then all of a sudden, 3 years from now, the Canadian dollar is at 50 cents to the US dollar. Your $2 million is being devalued because Canada is very, very dependent upon imports to our country, and we're also very dependent on exporting our goods. And what's happening right now with the trade war is we're getting like smacked every which way, and there's nothing you can do about it. There's nothing we can do. Like, you can vote in Pierre Poilievre and the Conservatives, it doesn't matter. The ship has sailed, Canada has hit the iceberg, the ship is sinking, and it's just a matter of who can save as many people as possible at this point. Right, so it's a matter of what can you do to protect yourself. Start thinking outside the box and challenge your financial planner and ask them how would they protect you in the event of a Canadian currency collapse. And don't accept that it will never happen. Okay, there's risk, right? So challenge your financial planner to come up with a plan for you that is going to diversify your hard-earned savings into places that is going to protect the value of your overall assets. He ended on real estate. Obviously, anyone who's followed my channel knows I'm big into real estate. We have a lot of real estate holdings now in Mexico, also holdings in Canada. We have launched a real estate investment fund here in Mexico, although I haven't put a lot of time into it just because I am wrapping up my last project. But if there is interest in getting involved in that fund, you can let me know by sending an email to info@maravillanairit.com, and I'll put you on the list. We're not really taking any new money right now until I've got the last project completed and kind of moved out of my day-to-day activities. And also, as a lot of you know, we're in the process of selling BC Bucerias, which is another company that we own here in Mexico. So once I have all this other stuff off my plate, then I can give 100% of my time to the investment fund. And that's what I just decided to do. I don't want to start working on the investment fund right now, making all sorts of new acquisitions, knowing that I don't have the time to give to that fund. But again, Mexico is a great place to be considering putting some money, and that could be 5%, 10% of your net worth to diversify yourself. I love the real estate play in Mexico. I love it for the long run. I think we are just getting started on a real estate boom, and we haven't seen what is going to happen. And that's not to say that we're going to see some hiccups in this market over the next few years. I think we will, but that means there's going to be opportunity. But long term, Mexico is on a choo-choo train, and that choo-choo train is heading into a new stratosphere. And that has that's for another video. I can go, and I have spoken about it before. It's all the reasons why Mexico is on the way to amazing growth in the real estate world. What I can say is I do have a few opportunities right now for those of you who might be interested in having a vacation rental property, something you could use when you come to Mexico, also something you could rent out to help basically pay the bills of having ownership of a vacation rental here in Mexico. Got some great units. I have a conditional sale right now on one unit that was 109,000. So I'll know next week if that is officially sold. I have a 1-bedroom at 159. I have a 2-bedroom, 2-bath at 209. I have another 2-bedroom, 2-bath at 250 in the Golden Zone, and a townhome that was originally priced at 600,000 at 550 grand. So great ways to move some money right now, especially if you're Canadian. And I have heard people say, look, I'm waiting for the Canadian dollar to get stronger before I make that purchase in Mexico. Don't wait. There may be a pullback, but the long-term news for the Canadian dollar is no bueno. So you may want to consider making that investment now before you truly get priced out of the market. And the beautiful thing about owning the real estate here in Mexico, when the Mexican peso was strong against the dollar, things started getting priced in pesos. Like we didn't get, a matter of fact, we got some gain. And now that the dollar is stronger against the peso, we're actually increasing the amount of pesos we're getting on our property. So it's a super, super nice hedge. And the end of the day, we're kind of tied to the US dollar here. So owning real estate in Mexico is a great way to have, even though you're investing in pesos, you still are truly hedged with values in US dollars. I thought I would go to the video I did 7 months ago. So let me just share that screen and let's see what I had to say. And we'll finish off with a little bit of analysis on why things are happening the way that they're happening right now. Okay, let's just see here. Canadians fleeing in record numbers. That's the one. Okay. So here is the Canadian dollar, and I'm looking at the weekly. Okay, so I'm going to go back to the pivot high of the US dollar, which was in March 2020. Okay, so that would be, we'll call it the pivot low of the Canadian dollar. Okay, so that's when the markets got hit. Everyone rushed into US dollars. So that's going to happen again. It's not a matter of if, it's a matter of when. And when people tell you, oh, this time's different, no, it isn't. There's never a different time. These times are not different. They're always the same. You can go back 100 years and the times are not different. Stuff like this plays out all the same. The only difference now is we could be, well, it's not even we could be, we are coming to the end of a financial system, right? And there's going to be a last man standing. So who's that man, right? Well, the US is going to be one of the last men standing. We can guarantee that. I think we can all agree on that. So let's see what happened here. The Canadian dollar got beat right up, and then it rallied with all that liquidity. Okay, kind of came back into parity where it once was with the US dollar. Kind of call it $1.20, which is kind of a nice sweet spot for the Canadian dollar. Maybe a little too strong, but not intensely strong. Okay, like back in the day when we had $150 oil prices, I think back in 2007, 2008, there was at one time the Canadian dollar was higher than US dollar. It was almost like a big sense of national pride, but that was pretty short-lived. That probably should have happened, but because of policy of the federal government to essentially completely destroy the Canadian oil industry, we did not have that same effect in these last several years. But anyways, so let's follow this trend. This trend is up on the US dollar, okay? And this trend is down on the US dollar or the Canadian dollar, because if I flipped it around the Canadian chart, it would just be reverse. Okay, so we kind of hit this pivot low. We're kind of now back to this area where there was strong resistance over the course of many years, all right? And from a textbook chart reading technical analysis, this is a massive long-term head and shoulders. And if it plays out, okay, you got this kind of shoulder here, these big shoulders, and you got this head down here. And how you measure a head and shoulders, and this doesn't mean this is exactly how it's going to play out, but hey, everyone of the market participants right now are looking at these charts. So this is one of the leading patterns that could potentially play out. And what you do is you take kind of from the neckline down to the tip of the head, and then you draw this line, which I just did. And then you see where that kind of goes. So that takes the Canadian dollar, kind of this $1.65. And I already have this number here at about $1.60. I think that's where the Canadian dollar is headed in the next 18 months or less. But the other thing you can look at here that kind of like supports it is it's gotten through this resistance line. It's punched through a few times and keeps getting rejected. Came back up again here, got rejected, punched back through, got rejected. But really, what is it getting rejected to? It's kind of getting rejected to a mean, and it's kind of getting rejected to, let me just see if I can it's getting rejected and forming this channel. And this channel is, we had a low here, we had a higher low here, and now we're having another higher low. If it breaks out over this line, you could be rest assured that the Canadian dollar is marching up to that $1.45, $1.50. And if it starts finding some comfort there, and we see more turmoil in the markets, you got your Canadian dollar heading to that $1.60, $1.65. Now, if it hits that point, and we still continue to see economic turmoil, I'm gonna just turn my screen off here, but you could start seeing, the Turkish. So yeah, this is a video I did 7 months ago, and I'm gonna flip you guys over to the current chart so we can actually see what it is. Or was I right? Let's just see who's going to make a bet here. So I'm going to go to the US. Oh, no, that's the wrong one. Let's go here. Okay. So when I was doing this video, we were kind of back over here, right? So the Canadian dollar was basically finding resistance in that $1.37, and then it tried to poke its head above the $1.39. It kept getting rejected, right? So since September 2022, it kind of made its move, and it's been sitting in this channel, right? From $1.39 all the way down to a $1.31 and change. And it's just like in this channel, bouncing around, bouncing around, bouncing around. Now, when something kind of bounces around in a channel, it's basically building energy, okay? As building energy to do one of two things, move higher or move lower. But you see certain signs, like you see this low here, call this pivot low, and then you have a higher low, and then you have another higher low. And technical analysis will look at that. When we hit that pivot low, we hit a little high, pivot high here, came back, hit a higher low, then we made a higher high, okay? Sorry, we made a higher high from this, made a higher low here, and then it was kind of off to the races. It just like punched through this resistance line. And that's not just like peeking its head up, or it peeks its head up and then, comes back. And this isn't like the COVID thing, because this was just all dramatic COVID. This has been a long, steady move to get back to here. So likely what's going to happen, and we're going to hit resistance here at $1.46, right? But is all this hoopla right now, okay, about the tariffs? Like, this tariff war is a big deal. It's going to damage the Canadian dollar. Is that just a reason to allow the market participants to just shred the Canadian dollar and and blow through this $1.46? And if it blows through this $1.46, we're going to be like finding a new channel, okay? It's going to like be popping between a $1.46 and a $1.50, and it's going to kind of like do what it did over here. And then once that happens, it's, getting to that $1.60. Yeah, my friends, I mean, when people say, I hope the Canadian dollar is going to recover, you can't live on hopium, okay? You just got to look at what the reality is there. Technically, the Canadian dollar sucks, okay? And just what's happening fundamentally right now, it is not looking good for the CAD. So I think we just have to call a spade, and we have to figure out ways to protect ourselves. I did a little newsletter, so I'm going to send that out today. I'm not going to get into a huge discussion of it, because it's going to take too much time on this video, and I want you guys to be engaged. So maybe what I'll do is in another video, I'll go a little bit more in depth on this newsletter, but look out for this newsletter. And if you like the reaction videos, if you want to see me do a little bit more of that, and I would like to get into also the Mexican side of things, the US side of things, not just beat up on Canada. And I'm not trying to beat up on Canada, I'm just trying to be a realist. I have a lot of assets still in Canada, and I have to be realistic about what the heck is going on in that country. And I think inevitably we are in for a world of pain. But maybe I can talk a little bit more in another upcoming video on that. Okay, everybody, thanks again for joining this episode. I hope you found this beneficial. Again, make sure you're challenging your financial planner. I always hear people saying, well, my financial planner knows. Like, okay, well, everyone's been doing the same freaking thing for years, and that is just basically put your money in the S&P or any other freaking stock, and you're going to be fine, right? But what happens when that system collapses? And if you're long on Canadian dollars just sitting in a GIC, you gotta rethink that. Because it's just a very precarious place to be. And I think, again, a month or 2 months of Canadian dollars in your bank account for emergency is great, but you definitely need to be diversified into U.S. Denominated investments. If you want to get more of a guaranteed, buy into U.S. Treasuries at this point, and stay away from the Canadian. All right, everybody, thanks for joining me. I hope you enjoyed this video. I'm gonna sign off right now with a little bit of music and enjoy it. Comment below if you want to see more stuff like this. I mean, I enjoy this. I could probably talk for hours. I know I got to work on the podcast, so many other things, but I got a job. I got 2 full-time jobs, and once I get rid of those full-time jobs, I will be able to do more of this, which I love. All right, everybody, nos vemos. Hasta luego and adiós desde la casa de la familia Goralski, aquí en Bucerias, Mexico.